Today we are starting with just the three of us. Marc Wesselink is still stuck in traffic, I just heard, so he will join us later. But Mark Soons is here from Mr. Cashflow, a beautiful book written about cash flow. Now, a whole community is being built around it, and it's involved in all sorts of things. Building companies, super cool to see. Derk van Dam, lawyer since 1993. The biggest office in the Benelux has been created in the franchise sector. Ultimately, I have poured my energy into building something wonderful, and now I am set to proceed. In the meantime, I am busy with investment funds in the Netherlands, establishing them and also dealing with many other structures. And I myself, Rowan Rozemond, among other things, building with DHF Hedge Fund and also with Derk Fund Structuring. Thus, we are starting today, and Marc Wesselink will be joining us shortly. Yes, the true startup investor startup bootcamp founded. He was one of the first in takeaway.com, built amazing companies all over Europe, all over the world, and now working with VentureRock, an investment party that essentially reverses the incubator model. Another great group of people, and with them, we weekly look at the financial markets and invest accordingly. Geopolitics and innovation and technology. Guys, this week the Swiss Central Bank is going back again to a reduction from 0.25 to 0.5%. I think we're just going back to negative interest rates, guys. I don't think anything has changed. We've been through COVID, well, we've had a hassle, and before we know it, we'll see negative interest rates again, or won't we? You can hardly imagine that will happen again.
With my limited understanding, so to speak, that's not a sign of economic advantage, you might say. I associate low interest rates, at least in a broader geopolitical context, with a somewhat worse economic position. I don't know how you see it.
The consumer often sees it as good at first glance. They often look at the short term, like house prices rising, so it's good for my wallet, or stocks rising, so it's good for my wallet. But it always has a bit of a ripple effect. And what this will decide, consumers don't notice immediately. For example, when the first interest rate cuts came last year and the year before, mortgage rates did not go down. They said it's actually not that good at all. So then you got a bit of, why aren't our rates going lower? You notice that a consumer often looks at it very differently because they look directly at what they feel in their wallet today. If they notice the effects of those interest rate cuts in a year or two, namely inflation, everything becomes more expensive in the supermarket, gasoline prices go up. So they just notice that this devaluation of money is really happening. Then they feel it in their wallet, and that's when they start to complain. So you notice that people are initially happy with the interest rate cut. When you're talking about interest rate cuts at a gathering or cocktail party, they say, oh, that's good. Then house prices will rise again, and the interest rate has gone down so we can buy more. Yes, no, that's just a short-term effect. The long-term effect is that you simply lose a lot of purchasing power.
Certainly, from a consumer perspective, I think you have a point there. But why is the central bank doing this? What is the rationale behind it?
Well, what you see is that, in my opinion, Switzerland is just trying to stay ahead of the ECB. Look, we also have Marc Wesselink there. We've already started a bit. But what you simply see is that the Swiss bank is trying to stay ahead of the ECB, and they are always good at that. Yes, I think they look a bit further ahead than the entire Eurozone. Of course, they have the luxury of their own currency right in the middle of Europe, so they also make it a very interesting country for investors to park their money. Still, despite the fact that Credit Suisse has obviously collapsed and the entire market is in turmoil, so to speak, it has actually become a breeding ground for new initiatives. And you can see that now too. How Switzerland is really working on taking that next step, because I found that to be an interesting piece of news this week. In Switzerland, they have set up the first fully regulated Swiss digital asset fund. With that, they are ahead of the rest of Europe and perhaps even America.
That's right, Mark. Welcome, by the way.
There was a little accident before Amsterdam. Normally, I like to do it from home, but I also have an appointment at the office here in Amsterdam later. So I thought I'd take the car nice and early. But yes, I'm not the only one doing that on a Thursday. And if someone then decides to crash a car into the guardrail, it does make things a bit difficult. Yes, no, I also saw Roman in Switzerland, but I also want to share what I've experienced over the past few weeks, because as you know, we are always looking for new European investors. We call them capital partners, and we were contacted by a Swiss family office. And this is not the first time. This is already the 6th time. It just turns out to be a front office for Russian money. You see that? And I also spoke with a number of people from the private equity world, and they said, yes, I hear that more and more often, that Switzerland is being misused as a trusted front door by a large number of parties, because then suddenly The trust in Switzerland is an asset, but also the secrecy, the anonymity suddenly becomes a threat.
Mark is really busy with that. I mean, the regulator in Luxembourg, he thinks he is the financial regulator in Switzerland. And you can see that they are very much focused on that. And especially those small offices, those small wealth managers, they are really being shut down. They are being put under significant compliance pressure. Okay, not as extreme as what we see in Europe, which we talked about last week. Maybe we have gone too far here in Europe. There is a sort of middle ground emerging. I definitely agree with you. I see that too. And yet you really need to pay close attention to it indeed when raising capital. But I must also say they are trying to adapt, only they seem to be doing it at a very strategic moment when I look at it. Because if we find a solution in Ukraine, but I must say, look, despite where we currently stand in that search for solutions, we are in a phase of seeking solutions and no longer in a phase of escalation, I think. Derk thinks differently about it, that if you take that into account, then it is, yes, interest rate cuts, assets, which naturally also brings secrecy with it. But yes, in this way, the fund, they try to frame it, and FIMA really goes after the smaller managers who were seeking that space. I think that with that, Switzerland is taking a good step in the right direction after they completely missed the mark with Credit Suisse, of course.
But then still that question, Mark 1 or Mark 2, it's just who is 1 or 2. Why are we looking at interest rate cuts again in your view? What is the basis for that, not only in Switzerland, but worldwide?
I'm Mark 2 because I was the second to call in. Mark, I was already on the line, so I'll let Mark and I speak first.
Yes, look, the whole interest rate story, governments are going to lower rates. That primarily has to do with the fact that they have a gigantic debt. And the lower the interest rate, the easier it becomes for them to manage that debt. So their debt burden decreases when the interest rate is lower. Moreover, they want to always stimulate the economy by lowering interest rates. The talk of the central banks, let's establish that reality doesn't always turn out well. That is the idea those banks have. With Switzerland, I have a slightly different idea because they don't primarily need to do it for their debts. They are simply engaging in signaling politics. So they are very much focused on being a pioneer and innovating. They don't want to show from the outside, look, we're doing crypto, look, we're lowering all these interest rates, look, we're doing all this, look, we're ahead of the rest. That's essentially what they mainly want to show. At least that's kind of the impression I get from what they've been putting out there over the past few weeks. And I'm also very curious how Mark sees it, because he always has a nice, unique perspective. But this is kind of what I saw, that I thought, oh yes, now we don't want to be the most well-behaved kid. The Netherlands always wants to be the most well-behaved kid in the class, but Switzerland wants to be the newest or the first kid in the class. Yes, that's kind of what I want to reflect in these two news reports as well.
A kind of market positioning of Switzerland in the international field market too?
Look, it's always a bit like when there's trouble. They always use interest rates as an instrument to calm certain sentiments where break time, because we just see that. Interest rate cuts are also used as a kind of marketing instrument. We'll lower the interest rate a bit, break time, so that we can all borrow a little faster, so that the economy gets going again, because everyone associates low interest rates with higher spending, break time. And of course, every economy is waiting for that. So I also feel like they're using it as a marketing tool. But of course, it's also a reduction of rate. Break time dash from 0.4s, actual debt and own cash out. I see that too. And let's be honest, low interest. I can still remember very well that my dad had an interest mortgage of 12.4%. Break time as 0.6. So we've been quite spoiled in recent years with 0.2. I had a mortgage on Euribor. I even got the interest refunded. That's really ridiculous nonsense. But let's be honest, we've been very spoiled with interest rates between 1% and 4%.
Yes, you used to have the Silver Fleet account, right?
Yes, then you'd get 4%, 6% interest, and people would just pay 11 to 12% interest on a mortgage. I've done a lot of business in South Africa. And if you buy a house there, you're just paying 16% interest.
I really do see it as, look at that interest rate. It's quite a good element, because what you do with that interest, and that's how I see it, so that interest actually ensures a redistribution of wealth. Because in this way, you ensure that homes remain relatively expensive, at least that home ownership is relatively expensive, and not so much, as you see now, that the property value increases significantly, because we've seen that with those low interest rates. The value of homes is increasing significantly, while if you keep those interest rates higher, then that value essentially goes down, because you need more money to meet your monthly fees. As a result, it is much harder for first-time buyers to enter the housing market. They do this, of course, to actually protect the pensions of the baby boomers, to ensure that the value is invested in the house, and you really see that in politics, if you ask me. So if we just preserve that value, because if we undermine it, then the idea is bad for our voters, for our base, where we draw our voters from. And I really see that by keeping those interest rates low, we remain in an economy where assets continue to grow in value, and actually much too quickly. If you look at it historically, if you look even further back, you really see that house prices remain fairly stable until we start lowering interest rates extremely. Thus, you can almost see it as a levy on the younger generation without them realizing it, because a low interest rate sounds great, but it is literally a levy on the younger generation because they can no longer buy a house and therefore cannot rent, either due to various other factors. But that's what makes it, that's what creates the problem now with the housing market. With the rise in expensive food prices, it's all tied to that interest rate. And if we pay a normal capital market interest rate, we have a much more normal market than when we have a market of excesses where we can indeed hold some products for a lower interest rate. Yes, that's just distortion. That's abusing the financial system too. My main concern is to make sure that the baby boomers are financially capable of handling that. This is my genuine perspective on the matter.
Yes, but if you look at the past 20 years regarding the total growth of orange produce, and if you then divide that over the average growth, you always end up with around 4% growth per year of those assets. Just calculate it.
Real estate in the Netherlands has had an average growth of 13% per year over the past 30 years.
Over the past 30 years, if you look again over the past 20 years, it really depends on which assets, and you have to look at the whole of the Netherlands, not just the Randstad. You're talking about the Randstad now, the metropolitan areas. They have indeed shown that growth, but if you take the whole of the Netherlands, you're still only at an average growth of 4, I believe it's 4.6%. Yes, if you look at it realistically, which is also, once again, the real growth, then we both know what happened with the euro and the depreciation of that euro, at least before the expenditure. Then I think, not much has changed. Not much has changed. I still come, yes, Derk also writes from the euro, from the guilder era, and that was just €1, 22 guilders. And if you take all that into account, then that ratio isn't really very skewed.
So I exchanged my guilder for 2.0371. For some inexplicable reason, I've kept in mind my entire life that this was the exchange rate at that moment. And yes, I don't completely agree with you, because you can literally see that house prices have doubled over the past decades. And that is indeed about securing the pensions of the baby boomers. And we are now going to tax that transfer quite heavily, actually, almost throughout Europe, not everywhere, but almost throughout Europe, we are going to tax it properly. And with the idea that you live longer anyway, and thus that transfer becomes less important because you will pass it on to your children later in life. And thus you should make a better start yourself. And that is still going very well in the Dutch economy. I'm not saying that we indeed have a significant lag behind our youth, but in terms of buying assets, they are certainly lagging behind. When I simply talk to young people of my age and 10 years younger, so to speak, the exposure they have in the market is minimal to very small. And of course, you always have those stories of the Bitcoin millionaires and those who bought Nvidia at just the right moment, but that's the same as having a subsection that enjoys skating and bought exactly the right skates at the right time when it was cool. That doesn't have much to do with a whole segment of society making the right decision to move forward. And what I found so beautiful, which I came across this week, is someone who suggested, what if we had put all pensions in the S&P or in the AEX? What would have been the difference in terms of the pension sector? Because how great would it have been if we had said everyone contributes to building our economy because they own a piece of what makes Europe great. So they say take the AEX or take another index. That's a much more cohesive feeling, almost capitalistic socialist. A much more beautiful goal than saying, yes, we're going to have pension funds that come with a return of between the 2 or 1.5% and 4%, while we were just discussing that this growth plus inflation doesn't even keep up. So they become disconnected from that economy.
Well, of course, the best example is the largest fund in the world. From Norway, they naturally have their entire oil and gas revenues invested in a fund. And we used it to reduce our budget deficits, but those Norwegians, they now receive an annual dividend payout that easily wipes out their entire budget deficit. And on average, a Norwegian owns, I believe, something like 150 or 160,000 euros because of it. It's quite amusing, of course. A wonderful article also about what if England had made the same choice as Norway. Then they would have been much better off. And I also find it indeed very interesting that the whole discussion in the startup world has been ongoing for the past 10 or 15 years about pension funds. Why don't you invest in innovation in the Netherlands/Europe? There are just examples that, yes, my colleague in the venture world of NLCL Health, Bert Argent, had posted a concise article about it on LinkedIn. Sell your shares in Tesla, invest it in European innovation, and in doing so, you will eventually grow with Europe. And it is, of course, very strange that European funds invest extremely heavily in venture capital in America and virtually zero in Europe. And when you start thinking about what a pension is for, a pension is the growth of your own pension holders. I believe that this is accomplished simply by making investments in America.
That is precisely the case. By investing in America, you increase the disparity between Europe and America, and this is perfectly in line with expectations. If you look at statistics regarding when the European economy and the American economy were quite similar in that respect, and if you look at those statistics to see when it essentially shifted the other way, yes, that's truly absurd. That's precisely when the tech boom actually began.
And as a result, absolutely, we have also lost a few wonderful companies, originally Dutch companies. Booking is, of course, the biggest example of that. They had to move to America because they needed growth capital. It was originally an SGD's company. It is a purely Dutch company. The office is right across the street. However, it is currently American listed.
Yes, and you are literally shorting your own economy.
What are you doing, and how many large tech companies are there currently in Europe? Especially if you look at big tech, Google, X, Joe, Meta, all those providers, they are all American. As that could indeed have been much more. It's a segue, by the way. Sorry, Mark, maybe you want to say that too. We are now, of course, talking about establishing a massive defense fund. This is being strongly agreed upon in European politics.
Yes, it has been around for a while. They established a NATO fund a few years ago, of course.
Yes, but now we are talking about those 800 billion or so, which should now be invested in European defense. If I listen correctly from EU Circle, especially in European production, well, I think that's actually a very good support. I hope it works. But actually, that aligns with what you're saying now. Putting a bit of money into your own economy. Well, Trump says that too in a certain way. Sounds isolationist. What you just mentioned, especially regarding those pension funds. That is truly wisdom, and it's a shame that it hasn't happened.
Of course, it's partly organizational policy and strategic choices, but isn't there also, I always wonder, isn't there just a piece of legislation behind it? That they can't do certain things and make certain other choices.
I actually have a beautiful example of this from a company that we are discussing this week in Brabant, a large clothing supplier. Coincidentally, I was there with Derk, and they had a beautiful Formula E car from Haas as an advertisement. They also handle all the merch. What became so clear from that is simply out of interest. Well, Derk, maybe you should tell it, but it's just about asking, how is the procurement of clothing for the police and for the army? The simple answer is just yes, that's coming now. That's starting to happen because we are now in some way beginning to think rationally about maybe we should source it locally. But before, it literally came from China or it came from elsewhere in Asia.
The only thing it was always about was the price. I can tell from my own observation, from my own military capacity, that it certainly wasn't always about the quality. Some items fell apart when you put them on, and that is also starting to change now. The buyers at defense have put on a completely different kind of hat recently. Fortunately, things are really moving strongly in the right direction. And there's a little money there too, with your figure, Derk. Yes, that's impossible. Especially the size of my head, that's just a hopeless issue. But those trends are indeed changing. Yes, absolutely. And legislation, but legislation is also a political instrument, right?
Yes, what's interesting and not widely known is that in America, almost at the moment you were just talking about, Rowan, that tech boom, America has implemented a kind of arrangement for endowment and pension funds that if they allocate money into venture capital, they are guaranteed to get their investment back from the government. And that's also one of the reasons why a number of European pension funds have taken advantage of it. But that's the underlying reason why so much pension money, 10 to 12 times as much as in Europe, investments are made in private equity/venture capital.
Ideas are 10 times better than saying, let's all start a fund and put a bureaucrat in charge, and they have to decide where it goes. You can indeed incorporate such backstops much more simply. It's a world of incentives. It's a world of ensuring you set the right incentives to achieve an end result. And instead, we somehow fail to utilize that and say, okay, let's just ignore it for a moment. Because that might not be ethical or might go against our policy, so we will just control it ourselves. We put someone in charge with zero understanding of the matter to essentially be manipulated by a lobby in Brussels street vendor to arrive at the best result. Well, not in an economic sense, I can tell you.
I was also shocked by it. Last year, I discovered that 25% of European VCs are led by former bankers and accountants. In America, that is 25%. In other words, the other 5% of European VCs are led by entrepreneurs, and in America, 25% of VCs are led by ex-business owners.
Entrepreneurs. Let's continue for a moment because linking them, perhaps a nice bridge. linking them from America, from Asia, doesn't always go smoothly. Volatility with the dollar is really on the horizon compared to the Netherlands. But the Turkish lira has also taken a significant hit this week. Of course, there are also some political reasons behind that. But anyway, it does show once again that those two are connected and that these currencies, the currency trade, are indeed closely tied to the political climate. But anyway, there is more to say about that dollar development.
I find it an interesting time. All those decisions by Trump do ensure that not only trade relations are under pressure, but also the exchange rate. Because yes, those are two levers to pull. A stronger dollar also means they can buy more abroad with it. You will see that America is actually going to be hit on two fronts.
And maybe it's also a prelude to the plans of the British countries to eventually create a digital currency for their trade. Subtitles submitted by the Amara.
The plan has been in the works for a long time. I once wrote a piece about how I think this will develop. All those books by Ray Dalio and all the other people who are keeping an eye on it, they also talk about a de-dollarization, but they always refer to a world power. You've had the Netherlands as a world power, England, America, China, and all of that is nicely represented in those graphs. But what I actually think is that there won't be a single world power, but a series of mini powers that come together to form a somewhat larger power, each with its own little system, its own digital currency or trade relations. So you just get winners in different areas and the spoils are just more evenly distributed.
A multipolar world instead of unity. A polar world that we have seen after the fall of the wall. I also think that in America at the moment, actually in recent years, and you saw that under the Biden administration, people find it very difficult in America to acknowledge that they are no longer the only superpower in the world.
Well, look, I think the big difference was last time, because after World War II, America also imposed quite a few tariffs, of course. And from their perspective, that looks very good. But from the outside world, you create a kind of big wall to send extra products to you. However, there is simply a fundamental difference, and that is that production in America was running at full capacity at that time. They hadn't really felt war on their land, so they had nice factories producing many products. They had production lines that were easily convertible to usable products. And they were also the first in the airline industry to establish quite a large Boeing, of course, but there were a few other players at that time building airplanes. In the auto industry, in consumer goods, actually all stemmed from production lines that were set up for World War II, and Europe did not have that infrastructure. A plan was then, of course, devised to help Europe with that reconstruction. It was entirely built on ensuring that America would handle the production, that America would supply the steel, that America would undertake the infrastructure projects, and they tried to do this repeatedly after a war. Generally, they don't succeed. And I look at Afghanistan, there is currently no Americans quickly building, even though I must honestly say Zaha Hadid, the central bank office, designed by Zaha Hadid, hiring architects in Iraq, is one of the most beautiful buildings I know. Truly absurd in Baghdad, so they are indeed making progress. Nonetheless, that strategy does not work. What you are about to see indeed is, first of all, quite a volatile dollar market, at least the dollar compared to all other currencies, because we need to reprice ourselves. And in the meantime, it means that shipping companies, that traders will increase the spread between buying and selling, because they need to, because they have to factor in that risk, because you have to hedge that currency risk, so your spread becomes larger. That means sometimes they are on the right side and they capture a significant spread. And sometimes they are on the wrong side, causing them to lose a bit on a shipment. And you also see that in the shipping industry in Rotterdam, that transportation prices are going up again. And that is essentially not good for our European economy either, because we are not such strong producers anymore. In my opinion, this is an important factor that we will see, but also precisely, and this is perhaps the most interesting part, a very intriguing playing field for stablecoins, because that is infrastructure that can now be implemented, which previously had no space. Why would you SEPA works? I mean, the risks aren't that big, so instant payment around the world isn't that important. I mean, whether your transaction takes 7 hours, 24 hours, or 72 hours, because it's T plus 2, transaction date plus 2. If you can solve that with stablecoins to transaction date 2 seconds instead of 2 days, then you no longer have that spread risk. And I think there's really a huge innovation in that. And I see America picking that up better again, actually ensuring that they are the leaders in those US dollar-based stablecoins rather than us in Europe. Also in Asia, because to return to Marc Wesselik's view on BRICS, BRICS has never lent money to anyone. I mean, all it is a massive office. The English literally promised that the rest of NATO would join in, even though we didn't have a treaty with them yet,
Yes,
without consultation.
and that is therefore not aligned. I think it will come down to these kinds of treaties proving to be a dead letter. But I can imagine that as a Ukrainian, you might think, well, thanks for these nice promises. What good are they to us, the proverbial dead mouse?
Yes, well, but this happens in January, so that is indeed true. The old government, wasn't it also around that time that it was still quite under fire and that he just had to show his balls, so to speak?
But beware, the current Starmer government is actually going just as far. And this treaty is simply valid. It is, of course, mainly Starmer and Macron who are saying we're going to deploy. Plans have already been made by the chiefs of staff of the English and French military staffs to make plans regarding the actual deployment of many troops in Ukraine. That hasn't happened yet. Again, yes, what do I know? I'm not a part of that. What strikes me the most, my main takeaway here, is the total misalignment now between the American and European thinking on this. That is, I find it very remarkable. Yes?
B. Yes, it is. I also always find the term peacekeeping force quite remarkable.
Yes, there is no peace. I believe we mentioned that at the beginning of this session as well. We will continue for a while with showing who has the longest, and that means this struggle will continue for the time being. So yes, how does that relate to the concept of peacekeeping forces? I don't know.
It's a piece of marketing towards the citizens. If we call them war troops, then we are at war. And now we ensure that peace is maintained. We certainly have enough experience with sending peacekeeping forces to war zones.
I have been part of it myself, so I can speak about it, yes.
Yes,
Have you seen the speech by Clout in the parliament in France?
hits the nail on the head. His articulation is simple, explains how the world works and where it's heading. Clever, but unfortunately, he's absolutely right.
Well, it's actually in line with what we're discussing now. How will this play out? Yes, it's a misalignment, but, well, we'll see. I'm just looking at the clock, gentlemen. Today's podcast will be a bit shorter than usual. You need to stand out, right? I really have to leave soon, due to other commitments.
Fine. Absolutely fine. Let's move on to innovation. Dirk, see you again soon.
Yes, gentlemen, it was a great pleasure once again. Absolutely fine. Until next time.
See you next time. Goodbye. All right, let's move on to China. Or did you want to say something about that, about the previous topic, Mark? No, I don't.
I was already jumping into the computer chips because I also want to show who has the biggest one.
Absolutely, absolutely. Because China is really making significant strides in that area.
And they have to. They're being forced by us or by the Western world. If I'm not allowed to get an ASML machine, I'll build one myself. I'll attack a province where the purples are. Yes.
This is indeed a development, a very important development, because what this essentially does is the entire industry, the entire chip industry, it all comes together at ASML here near me, which is now for the first time essentially in danger. That position of the chip maker, ASML, essentially builds, for those who don't know, a machine that makes it possible to produce the most advanced chips. So these machines go to Taiwan, they go to America to make those chips there. We have literally agreed with America that this machine cannot be sent to China, not to Asia. And in itself, there are older ASML machines in China, but not the latest variant. And now you see that indeed with innovation. And of course, we've already seen that with DeepSeek Chair GTP from China, which is still better than Chair GTP. You now see that emerging in the chips as well. And you really see that China is taking steps to ensure they are self-sufficient, that they are self-sustainable. Dangerous, but also a very cool development.
Yes, and China is very good at this. What China excels at is not thinking in decades, but in generations. Over the past 30 years, they have quietly built up everything under the radar, which is now starting to come to the forefront. China is very secretive. They keep everything under wraps for a long time and occasionally reveal their progress bit by bit. And then you can say that China is probably a bit further along than this, but they happen to want to push this as a shockwave through the world, essentially as a kind of counter-response to Trump. China never shows all its cards, but they are far ahead in the field of electric cars, in the field of microchips, in the field of production, in the field of AI. However, they have their own economy, which is already enormous, to sustain. So they don't necessarily have to broadcast everything on the international stage right away. But this is indeed a significant blow for which ASML should be given a 10-second pause by the referee. They really need to develop a strategy for this.
Yes. because it is a completely different material. So, all machines at ASML are designed to print on silicon.
That's the story, Mark, because it's not so much that it's faster. Faster, they can catch up with that. But on different material, that means those machines are actually unusable. So they would have to fully embrace new technology to make that leap forward. I find that quite substantial. And I'm not a technician, but I understand enough about technology to know that if you start working with different materials, the machines are actually can no longer build on that. I lived in Veldhoven for many years. I've also seen how ASML is taking over half of Veldhoven. They have created their own exit and entrance on the highway and things like that. Almost everyone in our circle has someone in the family who works at ASML. We even moved because all the experts at the primary school started teaching vehicle English from India and Pakistan. All the knowledge they have hired. So we have witnessed the growth beautifully, the almost monopoly position of ASML when it comes to building those machines. But this could potentially put an end to that monopoly.
Down about 22% in the past 12 months. I just threw it up on the screen.
These are the most fun. One of the people whose articles and posts I often read is Rowan Rozemond, a sort of Dutch Warren Buffett. He analyzes all these kinds of stock prices and does value investing. I'm actually very curious about what kind of analysis he will apply to it. This is really a matter of looking at the longer term again. Can they make that content shift? Can they survive in a duopoly? What does that do to the stock price? Is there a market for it? One of the things I have learned from reading all those articles is that there is a cost of transfer. The current customers of ASML have to incur certain costs to work with that new technology. That can sometimes take 10, 15 to 20 years because those machines have a certain lifespan. All ASML customers who have purchased those machines are not going to suddenly say, oh, there's a new technology that's 40% faster. I'm going to get that other machine right away this year. But it's still just a calculation. If they see that instead of a 20-year depreciation, I can depreciate that thing over 10 years, then the decision will be made sooner. ASML will definitely feel that. It's not like they'll immediately lose 20% of their customers, but it's mainly about the new condition.
Yes, plus Mark, there's also the fact that unfortunately I have enough experience investing in hardware startups. Stepped on the road to scale, yes, they've developed a chip, but now making 100,000 per second via a machine, that's where they are. The latest machine from ASML, it's a cumulative process over the past 40 years, which they have been able to achieve on this machine with this technology. Yes, with Zeiss lenses, truly unique technology, cooling, but also light technology, it is a cumulative learning before China sets up a small machine there that can produce a new chip per 100,000.
Given in a week, a year? Absolutely not. Suppose it had only dropped by 20% based on this news. Then I would say go ahead and buy, because that is not an issue at all. There are, of course, multiple factors that have caused the price to drop.
And if we look at the market, AI is a very important driver now, also for ASML. You can now see that actually Silicon Valley startups with AI are growing much faster, becoming profitable much quicker, so profitable that it has truly become an accelerator, and that even among CEOs in the market, bets are being placed on when the first unicorn, a billion-dollar company with just one person, will exist. Only the founder, no employees. When will it happen? I strongly believe it will. But yes, in what time frame? That's the question. But yes, you really see that AI is a very important step for which a lot of chips are naturally needed.
I think with one person, Rowan, it will be quite challenging. Less than 10, I believe, because being on your own is just being on your own. And you often run into walls, break time Derk 08s. But I also know, experience also shows that the chances of success for single founder teams are significantly lower than if you are with 2 or 3 people, because you'd rather laugh and cry with 2 or 3 than on your own. But the fact is that many things can simply be handled by agents, which allows you to be much more flexible in adapting, yes, everything based on new technology and not being busy managing cohorts of people.
Well, it's interesting that you say that, because I always say you need a visionary and an operator or a schizophrenic. Actually, that operator is moving to those AI agents. On the other hand, you need someone who still provides input now. But if you no longer need input and can only share your vision, then it could become a very interesting world.
Yes, indeed. But in the end, you always need a certain level of contact with the end user to ultimately get that feedback loop going. Now, you also have agents for that. That continuously makes iterations based on the use of something, and that you can simply have 1,000 versions of a product tested by 1,000 different people. But it's also about the operational side. Doing this on your own is super challenging.
The entrepreneur is already terribly lonely.
And entrepreneurship is already incredibly difficult. I certainly think so. There are also plenty of single founder companies, but they are always supported by a second and third founder. Yes, we've all experienced it. You get to see every corner of the room in terms of emotion, and then it's always good to be able to do it with 2 or 3 people. Yes, together, I mean. Just like this podcast, it's more fun to do it with 3 people than to have to listen to Rowan all day, or to Mark, or to me. Yes, then my vote goes
It's
to
been
Mark.
terribly busy this week with little children who do all sorts of things without really being aware of it. But, well, it's part of it. It also brings a lot of beauty. Yes, you see the same step being taken in the Netherlands, of course. TNO also had a significant announcement this week.
Yes, Eftel, a great collaboration between InvestNL, Techly, and TNO. But of course, I can tell you much more about it because it has been shared. But I really think it's a great step in the right direction to promote innovation and entrepreneurship. I think we all hold that dear. And if they start facilitating these kinds of partnerships at this level, it also offers us opportunities to benefit. So yes, I'm quite happy with it.
Yes. And particularly, one of the main focuses is that you help bring university research to the market, because spin-offs and spin-outs from universities are a rarity in Europe. We are really at the back of the line. Look at American universities, Stanford, Harvard, they are extremely good at it. Also, a bit like 0.6, the Doors Fund we just talked about. Those companies that successfully utilize the research from Harvard and Stanford, break time at 0.5s. They also reinvest money to the funds of Harvard and Stanford, making them the richest universities in the world, not through tuition, but through the successful entrepreneurs who, with knowledge and R&D from the university, have started a company. And we are just doing terribly at that here in Europe. Break time, and that should be much better because research hardly ever makes it from universities to the market. The times it does happen, it often fails because the professor turns out not to be the entrepreneur and is very afraid to share it, and therefore has no chance of success from the outset. And that is also one of the reasons why I naturally started with a venture studio model at the time, so that you pick up much more research, pick up R&D tech, and bring it to the market, to the first customer with a group of experienced entrepreneurs. That excites me.
Yes, what I often miss in the Netherlands. Delft does have that, but there are just few universities that really have a good business accelerator on campus.
Well, they all have it.
Yes, but then we're also talking about a piece of competence.
Utrecht Inkeer was the first, but each university has an incubator.
Well, that's exactly why TNO is entering into this collaboration, because they also mention the number of startups, these kinds of startups, which they focus on, went from nearly 200 to 128. So that's a significant drop. And in addition, the number of startups that received 10 million in funding or more actually increased from 13 to 21.5%. So that's more efficient. But we have less to choose from. So on the other hand, you could also say that more money is going to a smaller group. However, that is still below the European average of 23%. And I find it scary that that's the average, because I don't know many entrepreneurs who are doing business in Greece in the high-tech industry, or who are doing business in Sicily in the high-tech industry. So if 23 is the European average, then we are really lagging behind, because we should be leading with where we stand. America is at 54%. So we indeed only have half. We are at half of what America is doing. Yes, we basically already have that. That has perhaps become a bit of the recurring theme of this podcast itself.
Yes.
That we are really lagging behind in that regard. Chart that I came across this week, and I'll share it on the screen. So if you look at the US and you take the fans away from there, then we are doing just as well in Europe. Maybe even better. So how much innovation comes from the fans? It shows once again.
Eric Schilder is naturally also influenced by the fact that in America, many companies focus on defense because it's simply a major industry there. It's also a bit of a chicken and egg story. If those companies didn't channel money into defense, they would probably focus their business elsewhere. So they might produce corporate clothing instead of combat vests, for example. So it's driven by what's significant in the economy.
It's certainly striking to see that particularly Israeli companies, just this week, of course, WIS was acquired by Google for an absurd amount. Yes, they are all former techies from the military, former security personnel from the military. And when you see what has happened over the past 5 years, despite the current situation in Israel, how many companies have ultimately been sold to American big tech from Israel? Yes, it's remarkable. It is really quite remarkable to see.
I find that very interesting because during the time I mainly did seed investments and ran an incubator, I looked very closely at what the core motivation is for someone to start a company. It is often not linked to discovering a new technology. That is not the main motivation. I also always found a nice difference between men and women is, for men, there needs to be some kind of necessity. They need to struggle to do something. And for women, it's quite the opposite. If there is enough security, they will venture out and start a business from that freedom. That is truly a huge contrast between these two groups. And of course, on an individual level, it works differently, but generally speaking, that's how it works. And you see that now more than ever. We are, of course, in an economy where it is not necessary. You don't have to start a business out of necessity because you can't get a job. If you come from a technical university, they try to recruit you even before you have your diploma. But yes, that very ecosystem makes it very difficult to subsequently promote the freedom of entrepreneurship when you also immediately receive a 6-figure salary as soon as you graduate from university.
We brainstormed with several parties in the startup world about what would happen if you created a basic income for entrepreneurs in the first 2 or 3 years to allow them to freely engage in entrepreneurship. I found it a very interesting exercise. Yes, and I am also a huge advocate, and that is, of course, the reason why I am doing what I'm doing now. I don't believe in what you do, but I believe in who you are, and I give you the opportunity to start. You have to go through a number of... The burden of proof is about showing whether you are truly looking at the market, listening to the market, and acting accordingly. Go, just go. And I have learned that the love for the problem is often much more important than the knowledge of the technology or the market. And the love for the problem can result in creating the right solution. Now, much easier than 10 years ago. You can now essentially talk about a possible solution to lovable, and then pop, you get a first version and you're done. Far too often, I have to explain it to a technician who doesn't understand me, but now I can just talk to an AI that creates a minimum viable product for me. Fantastic.
But you become more passionate about the problem when an entrepreneur has a basic income, the first 2 years.
You are, of course, familiar with Maslow pyramid, and if someone is constantly occupied with paying the rent, paying for food, and perhaps even feeding their child, then they are not focused on entrepreneurship.
No, they are in panic mode and not in creativity.
Immediately forbidden, yes. While theory also suggests that boys handle it quite well because something needs to happen. Only that doesn't work in technology because you have such a long lead time. That's the problem. But closing an investor under the guise of yes, but I have enough money myself, that doesn't really work well either. So it requires a balance. You should actually implement a kind of basic income after they have reached certain milestones. And I think that would work very well. Totally agree, because then you free them to solve a problem, but also love. In my view, it stems from pain. It comes from something you find in someone that you have previously experienced as not being the case. That is what most relationships are built on. That doesn't mean you should engage in toxic relationships. Not at all. That's absolutely not what I'm saying for those who wish to interpret it that way, but it is focused on that pain. You say love for the problem. You don't say love for the solution, because that pain is in there.
And you see that, funnily enough, at many technical universities. They pitch you everything about what their product can do. And when you ask, have you already talked to someone who is willing to pay for it? Then there is always a moment of silence. And they often have to answer no because they believe there is enough market for it. Yes. And they then find out that when they finally go to the market, either the market is already outdated or that actually no one waiting for it, let alone willing to spend so much money on it.
The market lacks efficiency and is driven by emotions, which is something they often overlook.
Certainly. They also don't get taught the whole product market fit, so that's really a challenge.
The solution first, build and they will come.
Yes, no, it's client first, right?
So the last word with the deep tech fail, because that naturally takes a very long time. Yes, research. That's why I also think it's good that such organizations like TNO, Invest NL, and Tech are joining forces. Startups depend on informal and angel investors. They are not going to invest for 6 years in the initial phase of research development for deep tech. So they are almost entirely dependent on government/subsidies, and they can bridge. And if you suddenly find yourself with a tech that drives the community, a TNO that often conducts research from the universities, invest NL that can invest that risk-bearing capital, and then also focus on a number of problem areas that we want to solve together. Absolutely great.
As a female entrepreneur, take leave and you get maternity leave. Then you receive minimum wage. I don't quite understand why it has to be minimum wage. But anyway, you get something like 500 euros a week to ensure you can continue. An employee receives 70% of their salary, or even more in some cases, but you're actually not proportionate. So for that, I return to my first point. So you want to have certainty first before you make such steps. All the wrong choice. But if you look at entrepreneurship, in essence, you are also yourself. Your business is your baby. You are building it. For that, you actually need the full social world you are part of. You need a kind of maternity leave to build that company. From that perspective, I completely agree with Wesselink. It should be encouraged by the government. And I think that concludes it. We've given birth to this third podcast again. And we haven't earned a cent from it. But we've presented it beautifully and shown everyone where we go every week and what we see and what we find interesting. Thank you all for watching. Like and subscribe to the podcast, and we'll be back next week. Thank you. Thank you, Rowan. Thank you, Mark. Goodbye.